Have you ever wondered what it takes to pay your house off early? Welcome to Lord Finance, where our goal is to give you the financial education to live your life financially free. When you take out a mortgage, you're taking out hundreds of thousands of dollars of debt, and sometimes that freaks you out. In this video we're going to give you 10 hacks to pay your house off early, but make sure you stay to the very end of this video. We're gonna give you a secret in the mortgage industry that not a lot of people are aware of that can truly save you tens of thousands of dollars on your mortgage. Number 1 is a weekly payment. With this website called OmniCalculator, you can put in a rough estimate of what you could afford if you were to make weekly payments to your mortgage. So let's just say we have a $400,000 mortgage. It's a 30-year loan, with an interest rate of 6.5%, and let's just say we want to throw an extra $200 every single week towards our mortgage. With that, we're paying an extra $1,000 a month. Instead of a 30-year mortgage, it actually takes us down 15 years and 10 months. It literally cuts our mortgage almost in half, simply by paying an extra $200 every single week. So just little strategies like paying your mortgage every week, paying an additional amount every week, can mean the difference in paying your house off. If you look at the numbers, at $400,000 we would have paid $910,000 including $500,010 in interest, saving over $230,000 in interest payments simply by adding an extra $200 a week to the mortgage payment. Number 2. You can use the cash back feature on credit cards and take those extra funds and apply it to your home mortgage. This is something that many aren't thinking about until they really start to look into it. Let's say you put everything on an American Express card and pay it off every month. You're building up all these points, and essentially you could use the cash back feature. If you get really smart and you start looking at some of these other credit cards where you can maybe get 5% back on gas or groceries or dining out or something very specific, you can then build up even more rewards and more cash back, and now every single month or every quarter or however often you decide to pull that cash out, I would use those funds and apply it to your mortgage just like I showed you in our first example. Just by applying another $100 to $200 a month can save you tens of thousands of dollars on your mortgage payment. So if you use your credit cards wisely, it could also save you a ton of money on your mortgage. Number 3. Get rid of your mortgage insurance as soon as possible. If you're in an FHA loan, remember the only way you can get out of your mortgage insurance is to refinance into a conventional loan. However, if you have a conventional loan up front, you want to make sure that the minute you get to that 78% LTV or loan to value, you are either contacting your servicer, the company you make your mortgage payments to, for them to then take you through the process of removing your mortgage insurance. Let's say your mortgage insurance payment was anywhere from $100 to $200 a month. The minute you remove the mortgage insurance, you would then continue making the same payment that you initially had, but applying the extra $100 or $200 towards your principal balance, so that you're accelerating your mortgage to save you money on the interest. Number 4. You can also look at making bi-weekly payments. Let's look on OmniCalculator, and we're going to look at the same scenario: $400,000 loan, 6.5% interest rate, and we're just going to add an extra $100 a month, and we're going to accelerate a payment to be bi-weekly. We're adding another $200+ towards our principal payment. You can see we're shaving off 9 years off the mortgage, which takes us from a 30-year to a little over 20 years. Which saves you around $189,000 just by making bi-weekly payments. Not all servicers allow you to do that though. Remember, the servicer is the company that you're making your payments to. So it may not be the original lender that you got your loan from, because a lot of times mortgage companies will sell their loans on the market. So they may get picked up by another servicer like Wells Fargo. All you need to do is contact them and see if they allow a bi-weekly payment. What could you do with an extra $189,000? That's a ton of money you can invest into anything like the stock market, real estate, crypto, or put that money into your kids' college fund. Number 5. Refinancing. But you need to be very smart and intentional about the refinance, and the reason why we say that is because we know a lot of folks recently that bought homes in the last couple of years and they got their interest rates in the 2s, and now they're looking at cashing out and doing a refinance. When you get into a home and you become a homeowner, you have to be smart, you have to be diligent about your finances. If not, you're going to run up your credit cards, and now you're using your house as a piggy bank and you're going to take the debt all the way back up. And especially we have appreciation these last few years, you're now taking on a higher loan balance than what you initially purchased the home for, and in his case he'd be looking at an interest rate almost 3 times what he initially got when we did his mortgage. That doesn't make smart financial sense. So if you're looking to do a refinance, don't just run out and do a refi. I've talked about this numerous times in my videos. You have to do your due diligence. You have to make sure that the information that you're looking at is transparent. The lender you're dealing with is being honest and giving you options, and not just throwing you into a mortgage and then you're just figuring it out later. Number 6, you can make a lump sum payment. If you are working in an industry kind of like real estate, mortgage, or maybe every once in a while you have a really good month and you have a bunch of extra cash laying around, you can use that money and apply it to the principal balance. Maybe you got a settlement or some extra funds that were coming your way that now you can apply those. Now you can apply that money towards your principal balance and again accelerating the mortgage to get that house paid off. And number 7, you can also look at making quarterly payments. So depending on maybe what your pay structure is like, that's also another great time that you can take a portion of, say, a quarterly bonus and apply it to your principal balance. Whether you want to make a quarterly payment or maybe you want to just apply monthly payments or weekly or bi-weekly like we shared earlier in this video, there's so many different strategies that you can apply that extra funds and put it towards paying off the house. And number 8, look at tax refunds. Remember, if you get a refund, use that money to pay off the house faster. Don't go out and buy the newest pair of Jordans or go out and buy a Louis Vuitton bag. There's nothing wrong with doing that from time to time, but if your goal is to truly pay your home off, you have to be disciplined for several years and make these sacrifices. That way you can pay your house off. So if you're one of the lucky ones that gets a tax refund every year, go ahead and apply that money towards your principal balance so that way you can achieve the goal of financial freedom. Number 9, rounding up your payments. No matter what your payment is, you either can round up to the next dollar, next $10, next $100. Whatever you can financially come up with and you're comfortable doing. It's a great way to add additional funds towards paying off the house, and it really doesn't break the bank because you're not thinking about it too much. You just round up to the next figure you're most comfortable with. Last but not least, the big secret we wanted you guys to stick around for. It's called recasting your mortgage. This is something that not a lot of homeowners are aware of. What we recommend you do is contact your servicer and ask them if they allow for a mortgage recast. A recast is where you are making a lump sum payment. The servicer will then readjust your mortgage based on that new loan balance. So let's just say in our example here we have a $400,000 loan, and typically what we've heard in the past, you have to bring in at least $50,000 or more. So at $400,000, let's say you did pay the $50,000, they would then re-amortize your payments based off the $350,000 balance, and you'd keep the same interest rate. You can stay disciplined to the goal, and apply the savings back to the original payment. Those are our 10 tips to help you pay your house off faster. We hope that you can see that just the littlest amount applying towards your principal balance can save you tens of thousands of dollars over the life of the loan. Get you out of debt, and own your home debt free. Thanks for watching. We'll see you on the next video.